Greetings, empowered investors. I am in Pasadena, California, in the Socialist Republic of California today. You know, I'll tell you, one thing California has the monopoly on is this great weather. It is a beautiful place, no question about it. The government is a disaster, but everything else is pretty cool. We have got a good show for you today. We're going to do a client case study, so we'll get into that in just a moment. But we just had the Fed meeting and just finished one of our monthly master classes. It was a good one today. Be sure to join us for those every month, by the way. jasonhartman.com/Wednesday. We don't have the next one planned yet, but you can just go there and register and you'll get the notifications for that. We always want to see you at those master classes. Let's dive into a couple of things before we get to our guest and client case study. First of all, the power of leverage, the massive power of leverage. The money supply is easing. The money printer is warming up. And what that means for you is that you want to own assets and you want to have debt against those assets, because the asset value appreciates and the debt depreciates. That's my trademark inflation-induced debt destruction strategy. It is super powerful. So let me just remind you of this, okay? If you're watching on video, this is a chart showing asset price inflation for the last 10 years. And it shows you the S&P 500 index went up 195%. It is the winner. Well, not too fast. Don't jump to conclusions. We'll get to that in a moment. Gold, number 2 at 117%. And the median home price, 3rd place. It only gets the bronze medal, not the gold medal, not the, well, wait, the gold medal is the best usually. Platinum is been thrown in there to be the best, but we'll go gold, silver, platinum, right? And so single family homes are 3rd place, but not so fast. That's if you pay cash for them. If you leverage them conservatively, 20% down, 80% financing, the return on investment for only one dimension of the single family home as an income property, which is this beautiful multi-dimensional asset class, the most historically proven asset class in world history, and the most tax-favored asset class in America, taxes being the largest expense most of us have, your return on investment is 465%, coming in at number 1, beating the S&P 500 by a huge margin, beating gold by a huge margin, and it's just a phenomenal asset class. It's been around and proven for thousands of years. It's not the new kid on the block like the shiny object sometimes. Well, that shiny object is really down, and that's the cryptocurrencies, right? But sometimes it's up, and it's, you know, it's the shiny object, but very speculative, not proven, very short track record, just about 15 years or so. So nothing big there. All right. The Fed is warming up the printing press, and today they warmed it up a little more. They cut the rate by a quarter point, 25 basis points, and that money has been flooding into the market for a few months now. Business has definitely picked up. It's been pretty slow for a couple of years for us. I've told you about that before. Activity down, but home prices still appreciating, and even after tripling the cost of money, right? And now the cost of money is coming down. So we're going to see more upward pressure on prices. And again, it's a slow moving asset. It's boring. You could never have TV stations dedicated to real estate like Bloomberg or CNBC or all the other mainstream media. Mainstream media. I call it the lamestream media because it's pretty lame. You could never have that because there's just not enough to say. You know, it's just a kind of a slow moving asset, but it's so reliable. It's the old fable of the tortoise and the hare, right? Real estate wins the game because it's just so reliable. Income property, most historically proven asset class in the world. Shadow demand. I've been talking about this for, I don't know, a good 2.5 years maybe. And here's another study says that this decade has already seen a deficit of 2.8 million fewer existing home sales than expected. Now, I say that number is actually higher. I say it's quite a bit higher. I say it's closer to like over 5 million. But everybody has different opinions. That's my opinion. And how do I arrive at that opinion? I look at the decline in sales since the cost of money tripled. And that represents to me a deficit of almost 6 million homes that have not sold, not transacted, because housing affordability has been so bad. But anyway, this study, this is Lance Lambert. He's been on the show before, Resi Club, very good guy, has a lot of great data, and he says 2.8 million is the deficit. But let's not split hairs over these numbers. It doesn't matter because we only have about 800,000 homes for sale in this country. And as rates keep coming down, we are going to see a lot of these buyers flood the market competing for very, very limited inventory. Inventory that is only about half of what it should be, adjusting for normal plus population growth over the last 10 years. Okay? So we have a housing shortage. No question about it. Don't let anybody lead you to believe otherwise. They are not disciplined. They are not using real data. They are people with opinions about how the sky is falling and trying to suck you into clickbait. Don't fall for it, okay? Those are the people that get all the views, all the clicks, but they don't get it right. And that's been proven over and over again. All right, the economy is booming. This is from Anthony Pompliano's newsletter today. And it says exactly, the American economy is booming. At least that's what the GDP numbers are telling us. The US GDP, gross domestic product, the size of the economy basically, right, grew at 3.8% year over year in the second quarter, and the Atlanta Fed is estimating Q3 growth at between 3.5 and 3.8%. Historical context is important to understand the magnitude of these numbers. The average GDP growth for countries around the world is approximately 2.9%, and the United States has outperformed for the last 80 years by growing GDP an average of 3.2% annually from 1947 to 2025. Folks, I know there's a lot of America haters, and I get it, whatever. My friend Gary, who's been on the show, he's one of our clients from many years ago. He lives in China, and I think the CCP has gotten to him because he loves to bash America. But compared to what? I mean, 8 decades of outperforming the entire f***ing planet? Okay, whatever. And we are going through another massive boom time with technology right now. And if you think AI is good, just wait until you put that AI into robots. We've got the vast majority of the leading companies in this country that are the world iconic companies. I mean, it's like the future is so good, I've got to wear shades, right? It really is. Now, listen, I always say it's an amazing time to be alive. And I mean that in terms of technology, standard of living, GDP, economy. It's a pretty incredible time. You ask me about the culture war, and I'm going to say it's a disaster. Okay, it's definitely not an amazing time to be alive. Culturally, there's a lot of problems, but that's another subject for another show. Okay, the month's supply of US existing homes is trending right now at 4.4 months, which you got to ask yourself, compared to what? Well, during the Great Recession and just coming out of the Great Recession, we got up to 12 months. So we are at 1/3 of that number now, and it's in the low band of the historically normal rate of months of supply. And what that means is if you took a snapshot in time and the number of homes for sale now and the existing demand, how long would it take to consume that inventory? 4.4 months. When it was super tight during the COVID era and every house was selling like lickety split with multiple offers, we got down to about 1.5 months of supply when it was a savagely impossible housing market. Now we're in the low band of normal. What's the high band of normal? Just under 6 months. Just under 6 months. And again, Great Recession, bad market, or well, what people would call a buyer's market, not a seller's market, 12 months. Okay, so there's your comparison, right? There is your comparison. Now, I want you to know I published a very classy ad today. There's a funny video that my neighbor sent me years ago. At the time, she was my neighbor. And it was, the F word is the most versatile word in the English language. And, you know, we kind of use it as punctuation, this profanity. I'm not proud of it. I'm just saying it's, you know, it's the way slang has evolved, right? And so this morning, I had this friend of mine, a successful friend, call me and ask me about a certain investment thing. And it just occurred to me, you know, why do people overcomplicate all this stuff? And so I made this little ad. Want to retire? Want to get rich? Stop overcomplicating it. Stop investing in other people's deals. Just buy some fucking houses and rent them out. Folks, that's it. That exact thing has worked for tens of millions, if not over 100 million people in this country. It's worked for probably billions of people around the world. What hasn't worked? Syndications, funds, the stock market, all of these other exotic things. You know, people love to overcomplicate everything. And I admit, I do it too. I'm guilty as charged. But when you get down to it, just stop investing in other people's deals. When you're investing in other people's deals, they're the ones making all the big money. Okay? Investing in a syndication is great for the syndicator. Investing in a stock is great for the seller of the stock. That's the founders of the company, the insiders, the first early rounds of employees that own all the stock in that company. That's their exit strategy. Syndicating an apartment complex is their exit strategy. And it's your lame deal where you're going to get the crumbs. Okay? If you want the real profits, you've got to be a direct investor. I mean, look, nobody ever got rich investing in a syndication except the syndicator, the promoter, the guy who set it up. They get rich, you get the scraps. So stop overcomplicating it. Stop investing in other people's deals. Just buy some fucking houses and rent them out. Okay? Pardon the profanity, but I hope I made the point with the F word there. Buy some fucking houses and rent them out. That works.